Hey everyone, welcome to the Sunday Stock Talk with Rich. Please drop a comment if you can hear me well. This is my first time using this software, so I want to make sure that everything works before we get started. Leave a comment in here. All right, we're good. Okay, looks good. All right, so thanks again for joining me. I appreciate your time. I know it's Sunday, but I want to help prepare you guys before the open at 6 p.m. And I want to really take some time to give back to you guys and share some of my my techniques and my style so that you can start using them for yourself. Okay, so as we go through this, I'm going to start off first with the ES because that's primarily what I trade the most. And as we go through this, please drop some comments in the chat with any stocks that you want me to go over. And then I'm going to spend a lot of time today. I'm going to go in a lot of detail to really share my thought process behind everything with you guys. Okay. So if we look at ES, right, and let me also pull up the SPX chart here so that we can look at everything. So normally when you want to do analysis, it's really good idea to look at the broader markets because the broader markets are almost like a leading indicator of what's going to happen. Are we overall going to be bullish? Are we overall going to be bearish? And that really determines what a lot of other stocks do, right? Because the big money moving the larger indexes will have an effect on everything in the market. Okay. So the first thing, so I want to just start from the beginning here and explain to you guys how I break down charts. Let's look at SPX and then I'll go over to ES. So the first thing you want to do when you have a chart, you want to zoom out as much as you can, right? That's the first thing. And then you want to ask yourself, what has happened in the past and what is the trend? So we can clearly see that the market's been in a big bull run. And with the COVID crash, there was that big attempt to start this bear market. And if we look to the left here, we had this low, which was broken, but then immediately bought back, which is one of the most powerful patterns in the market. When you break through something, but immediately get sucked back up, because this is what we call a trap, where a lot of shorts were trying to short below here, but immediately it turned around. Whenever we have this type of pattern, it becomes very explosive, right? And this happens on a day trading perspective too. So that's why I'm talking about this, because you'll see this when you day trade. This type of pattern. It's called, double bottom, double top, a feedback loop, a trap, many different names. But basically, what it is trapping the new sellers or new buyers that are trying to get into the breakout. Okay, and that's exactly why we had this, because we had a trap, and once we start getting up into this area, the bears are on a timer, and they have to convert and make a lower low, which they didn't, right? So if I draw this Fibonacci from this high to this low, this is how I use the fibs to really understand what's happening in the market. So like I said, when we start to retrace up here, this 618 area and the 786, where this was the zone that needed to be held by the bears for us to roll over. And you can see there were many attempts. There was this big inverted hammer, there was this big bear bar, another one, and eventually they just had to give up and throw in the towel. They could not get any momentum. So really and truly, looking over here now, I don't really see a reason to be extremely short bias besides this setup here. So this setup here is an inside bar, right? And this is something that I have many videos on and I talk about every week on Twitter. This inside bar represents a period of consolidation. So let's just look at the inside bars we had before. So we had this one, this one, this one, this one, and now we're here. So it's very rare on a weekly chart, but it's very powerful, as you can see here. So it depends. So once we were down here and we started pushing back up, my bias was long. So all we had to do was enter above these inside bars each time, right? And if we're a long-term investor, we can just add some money on the break of these inside bars. And if it does come back against us, we can just add some more. If we're a trader, we want to take these setups and try to get between 2 to 3 times our risk. So if we do, let's say, options here, and we're risking $1,000, we want to make between 2 to 3,000. Otherwise, it's not worth it. Okay. Here's the same thing here. So this one was really a nice short because if we look to the left, we had that big ignition bar. This was the start of the COVID, and then we had this inside bar, and the inside bar in this situation would have been a great short because of this downward momentum. So now we're up here. We broke through the all-time high, but as you can see, we've had a rejection, and now it's the time to make a decision for the bulls and the bears. Are we going to have a double top or not? That's the question. Nobody knows. But if I'm willing to take a chance on some shorts or some puts, I might throw in a few bucks here just to see how it goes, because the risk is pretty tight here, right? So let's just say the market opens at 6, we decide to go short, put a stop up here. So this could end up being an amazing double top, and we just kind of fall down, or we fall back to the mid-Bollinger Band, which will still give you some good money. And then we may base like this and then look to explode. Or we may fall down, trap some shorts again, and then go back up. So there's many scenarios. The very extremely bullish scenario is if we just open above this. If we open above these 2 wicks, I would pretty much think that it's over for the bears at this point. So we're going to be really looking at 6 o'clock to see where do we open to determine, what's likely to happen. And we can also beat another inside week again, where we go very, very tight before we finally have a resolution. And then when you're day trading this, it makes it so hard when the range is so small, right? That's why you need to look at the weekly charts and understand what can you expect. So when I said that last week, I said there was this doji, and really we're not going to get momentum until we break the high or the low of the doji. Guess what happened this week? We didn't break the high or the low, right? And that's why the trading, if we look back on ES here, was very choppy, because we could not break that range of that doji. So we just stayed like this. And this style of trading is tough for people that are trying to buy breakouts and looking for bigger picture plays, because it's just choppy, right? But nonetheless, there were still some decent plays during the week on ES. And I'm going to go to the SPY, and we're going to talk about some day trading opportunities that we had on SPY this week. But I don't see anyone posting any chart requests yet. So please post some so I can talk about them. Otherwise, I'll just go through the Twitter and see the ones that were posted earlier. But I'm going to take a little bit of detour, and then we're going to come back to the chart analysis. Let's look at the opportunities that were there in SPY this week from a day trading perspective. So I want to be able to talk about not just swinging and investing and stuff, but I want to teach you guys the day trading side, because when you day trade, I love day trading the most because your cash is turned over very quickly, right? Meaning that the way I day trade, at the end of the day, I don't have any risk, okay? Because my risk is fully covered because I am going to cash at the end of the day. So that's the main thing for me, is being in cash at the end of the day so I can sleep easy at night when it comes to day trading. The other things that I have, like my investments and my swings, I don't really look at them, because put the trade in and just walk away. Otherwise, it becomes too much of a burden on the mind. And in trading, you want to be fresh as possible. So let's go to the beginning of the week, which was the 16th. And then let's talk about all the opportunities that we had this week. Okay. So, and then I'm going to talk about what I called out on Twitter for you guys too, so you can see the thought process. So on the 16th, this was Monday. And the first thing that I said was, so I always have my previous day high and previous day low drawn. Okay, so let's do that together, so, like so. So the first 5-minute candle opened near the previous day's low. Anytime that happens, one of two things are going to happen. We're either going to poke through the low and rally so that we can stop these guys out, or we're going to just flush, right? So this first 5-minute bar was placed in a very interesting spot, right? It was near the low. And what I said on Twitter was, if we break through this low here, we're probably either going to see a flush or we're going to see a flush and a pull. So in terms of trading this, all you had to do was just enter right below the 5-minute bar. So you can, this is what we call an opening range play. So the first 5-minute candle, we are going to just bracket it. So if it breaks the low, we're going to short. If it breaks the high, we're going to go long. And then you can put your stop loss on the opposite side. So this is actually a funny story because this is how I started off trading. When I first started trading, I traded opening range breakouts because I didn't know any better, right? So I thought that was the most simplest thing to do, and it is, but it's not necessarily the most profitable, but it's still a great tool for you to use in specific situations. So in this situation, it makes sense to do opening range breakout because the first 5-minute bar is in a interesting spot. It's in a place near the previous day's low. So just by taking the short below here, I could have easily hit 3-1. So I like to go for 2 to 3 times my risk. So as an example, if my risk is $1,000, I need to make at least $2,000 to $3,000 for the trade to be worth it for me. Because in the long run, if we keep that principle up, we only need to be right between 20 to 35% of the time to make money. So that's the best way to keep it simple. There's no need for us to have an inverted risk to reward where we're risking 100. Like I saw someone post this recently. I'm not going to say any names, but someone said risk $100 to make $25. Does that make any sense? If you lose, so let's say you win three trades, then the fourth one you lose everything that you worked for. Never trade like that. It doesn't make any sense. And a lot of new traders trade like that because they want to feel good. Like, okay, I hit some profits. I want to lock it in. But it has to be within at least, a multiple of your risk. Otherwise, you're playing a losing game. Okay. So yeah, so that was a setup on Monday. And then if we just zoom out a little bit, the other call that I had here was this gap fill. So the gaps in the market tend to be filled. That's just from years of experience, and it's called a gap fill play. So right when we came to this gap fill, I called this out and I said, okay, here's a gap fill. This could be an area where we switch and go long. And if we wait for the candlestick, we had such a beautiful candlestick pattern. We had a big red bar followed by an inside bar and then another inside bar. So this is what we call a double inside bar play. And it's very, very rare to get a double inside bar play. So when this one set up, it was like almost like watching a movie. And we could see where the second inside bar closed, it closed very, very high up in the range of these wicks. So using that knowledge and the fact that we're at this gap fill, we could have just basically had our bias to be long. And that's what I ended up doing, is having a long bias when we were closing so high onto these wicks, right? Because if we're closing up here, then imagine anyone that's shorted over here, their stop loss is going to be right here and right here. And then that's how we take advantage of trap traders. So that's just a day trading lesson for what we did on Monday. But let's get back to the chart request because that's what I really wanted to talk about today. Okay, we have a lot. Okay, so let's start off with Baba. It's my favorite. So on Baba, whenever you're doing analysis, go to the weekly chart first. You'll thank me later on that. The daily, the hourly, the 4-hourly, there are a lot of false positives. They're very good, but there are a lot of false positives. The weeklies and the monthlies have a lot less false positives. So you want to start here and then build your bias and then work your way down. That's what we call top-down analysis, all right? So let's go to the monthly first, actually. So, and let's zoom out. So we can see that we're clearly in an uptrend, making higher highs, higher lows, higher highs. And we had this first, real big kind of bearish bar. So that's a sign that, potentially we could come back to this previous area of resistance to act as support. So it would look something like this, pull back into this 216 area, and then continue higher. And that's like your typical trending type of environment. You break through resistance and old resistance becomes support. But if we look for the shorter term right now, we look at the weekly, we have a Fibonacci setup in play. So someone asked me about how I draw my fibs. So I draw my fibs by just using the important candles on the chart. So either gaps like this or the most recent swing low or swing high. So if I wasn't using this as my pivot, I would use this. But the reason I'm using this as my pivot is because of this significant gap. Anytime there's a significant gap, that becomes your new anchor point. So I called this one out on the 16th, I believe. And I bought this BABA here when this was red. This candle didn't exist at the time. So BABA was somewhere down here in red. And I just threw in a few bucks because whenever we have this type of push, we will at least, I would say 70% of the time, we're at least going to see some kind of bounce at one of these fibs, right? So that knowledge gave me the confidence to put in a few bucks. And then by the end of the week, we already had that pop back up. So about 6% up from where I initially got in. So now the big question is, are we going to continue higher? Or are we going to roll over? And the answer is, I don't know. But I'm already positioned in a good place where if it does roll over, I don't care because I'm already up 6%, right? But if it does continue this trend, what we will see is we retrace the 786 like this. Then we're going to pop up to these fibs here, see some rejection, and then maybe pull back a little bit more and then finally break through these highs. So that's what we would expect to see from a typical uptrend Fibonacci play. And then these will be your real targets for the big payoff. So the 382, the 50, the 618, this zone right here will be the big payoff. So this will give us about, almost 50% return from the call. So that's obviously going to take a long time. And that's why I say, if you're in these things for a long run, put in a few bucks and just forget about it. Just come back in a few months. And if it doesn't work, I'll still be able to get out. I want to get out some partial, at least up here. So we'll see how the next week goes. But at this point, I won't lose money in this because even if next week we consolidate a little bit and then we start to roll over, I'll be able to move my stop up and just get out if it's not working out, right? So the bear case for BABA really has to break this low first. So if you're short biased for some reason, really look for this low to break first and then this low. And then if these two lows break, then we can go back to the monthly chart and then we can probably expect that we can come down all the way back into this zone here, which would be a really, really good bullish setup for very, very long term. All right, so that's BABA. Go back to weekly here. All right. Okay, BABA, Amazon, Spot. Okay, I'm going to go through options or stock on BABA. Good question. So you can do both. You can do whatever you're comfortable with. I'm not an options expert. I prefer stock because I don't have to deal with data, gamma, beta, blah, 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 on all those factors. Because if you have leverage in the stock, you can make just as much money as options. Most people trade options because they have a small account, right? But if you don't have a small account, there's no need to. And even if you do have a small account, you can still use margin to trade the stock itself, so you don't have to deal with time decay. So options are a double-edged sword. It's either going to work really, really well or you're going to get crushed. What I recommend is if you're going to do options, whatever you put in that option, that's your risk. There's no way to manage risk properly on an option. Because if you do try to put a stop loss, a lot of the times, because of the time decay, you might get like poked out for no reason, even though it might not hit the actual stop level on the stock, right? So what I would recommend is whatever you put in the options, it's either going to go to 0 or it's going to go to 2 or 3 times your what you put in. So that's how you should be playing them. And I have friends that do that. I think it's a good idea, but you know, it's riskier. So it's really up to you if you want to do that. All right. Okay, we'll keep going here. So I'm gonna go a little bit quicker. So Amazon weekly. Okay, so Amazon, I love Amazon a lot. We all love Amazon. We all use Amazon in one shape or form, or we know somebody that uses Amazon. Okay, so I think Amazon is a transformative company. I really love Amazon. I bought Amazon. Let me see. I'll go back to the daily chart to tell you where I bought it recently. Like this year, I decided to buy Amazon. Um, I bought Amazon here right at the beginning of the year. And because I decided that this was going to be an investment, when this whole thing happened here, I didn't care. I just sat through it, averaged down a little bit, and then Amazon is the best performing stock right now that I have in my portfolio. I'm up. When we were up here, I was up over 100%. I'm up about 75% right now, which is pretty amazing. So that's what I mean by if you believe in a company and you think it's transformative, you think it's gonna change the world, then whenever we dip, you buy. That's simple. So what I like about the pattern right now on Amazon is we've had time for this Bollinger Band to catch up, which is also the 20 EMA. This tends to act as support, as you can see here. And as you can see here, we have a double inside bar pattern. So this is basically a flag like this. And I'm expecting that wherever we break on these inside bars is where we're going to go. So if we break through here, I would expect us to come back in this zone. If we break through here, I would expect us to kind of pull back more deeper. If we pull back more deeper, we can take the fibs. We can take it from this swing low to this swing high up here. And then we can start seeing, okay, the 50 was 25.90. That'll be a great area to buy the 618 as well. Okay. And then let's move on. Spot. Okay. Same, it's almost very similar to Amazon in the sense that we've tested the Bollinger Band once, we've tested it twice. We don't have inside bars here, but we have the same type of flag pattern. So same type of thing. If we break down here, I'm expecting us to pull back. Then if we pull back, we can draw the fibs from the swing low to the swing high. And then we can start looking at the 50, the 618 for areas to buy. If we can get above this wick, I definitely see that we would likely squeeze and break all of these wicks. So if you are looking to get in bullish, I would rather wait for this wick to be filled before we continue up. Okay. Apple, Python, PLTR. Okay. All right. So Apple, most of tech is pretty much the same. Like you can see here, look at this. It kind of looks the same as Amazon, right? We have one test of the mid Bollinger, we have a second test, and then we have an inside bar here. So the same exact thing. So mostly everything is just flagging. It's flagging, right? It's making this nice flag, right? So I'm expecting if we're gonna break to the upside, that then we can make that leg up. But if we start to pull back down here, all we have to do is just draw these fibs. These fibs, the reason why these fibs work is because they're algorithms or robots position here. This is how I trade too. So let's say I want to get in an Apple, right? And I don't want to buy up here. I'll just put a limit order at $96 and just sit on it. And if it fills me, great. If it doesn't fill me, I don't care. I know if I get in at 96, that's a good price, right? Because it's the 50 fib. It's the halfway point of this fib. And the 50 and the 618 are great areas to add and to start building into positions. PLTR. Okay. Gosh, I'm not familiar with this. So, hey, look at this, guys. Look how nice this is. See that? This is what I love about inside bars. Look at this. Double inside bar, flag, right? Let me draw the line so maybe you can see it better. Look. So this is what we call a flag, right? So if you guys see patterns like this, it's not going to work all the time, okay? Let me make that clear. It's not going to work all the time. But do you see what happens when it does work? Look at that. Because this is consolidation. After consolidation comes acceleration. So if we were, let's say we played this stock right here, PLTR, we got in right above that inside bar, right? And we put a stop right below the inside bar. So right now, we're still holding it. It's about 13 times your risk. If we got up here, it's about 15 times your risk. So let's say you put $1,000 of risk and you walked away, you can make an easy 13 to 15 grand. And that's what trading comes down to. This pattern is not going to work all the time, but when it does, you have to capitalize on it. Okay, so for the technical analysis, there's not enough data here for me to really say something. This thing can keep going to the moon. I don't know. There's just not enough data to use technical analysis. What we can use technical analysis on is these inside bars. If we do get some more inside weeks, then we can look for another pattern like this to set up. So is now a good time to get into everything? Well, it depends. If you have money and you're making money every single month and that money is coming in, then all you have to do is just start putting in some capital. And as you get more money, if the stocks and the positions are going against you, you just average down, right? And you just do that to a certain limit and you make sure that it's on good companies that you're willing to hold for the foreseeable future, right? Right now, obviously, it's not as best a time to get in as it was in COVID. Like when I was telling people to buy Microsoft at $135, it's not that great. But at the same time, if the market wants to squeeze and it wants to push higher, it won't care about who's waiting and who's left behind. So I'd rather be in, even if it's a little bit, so that way I'm still going to make something. All right. Okay, there was one request up here. And I'm gonna go through this. So NETE, I don't know what that is. Let's see. Net element. I don't like this. All I could tell you from looking at it, let's go to a monthly, maybe it'll be better. Not really. So the monthly is setting up to be a nice engulfing bar. See how we had that inside bar and we broke through it? So I would really wait to see how this thing closes at the end of the month. If it can close up here, then it's likely that we're going to keep going up. But you have to also remember that this thing's been in a downtrend for a long time. So all of these buyers up here, if we start turning around and start putting in wicks like this, I wouldn't be surprised to see this thing completely roll over. Okay, let's look at Tilray. I remember Tilray. I remember the days of Tilray. I remember when Tilray was up here. I remember this actual day, and everybody was talking about when you hear random people talking about how they want to buy Tilray and they want to buy these companies that have squeezed up 200%. That's the time when you know you got a short, because that's when it's getting to the news coverage and all that, and that's when some big fish is waiting to short everyone, and that's exactly what happened. Personally, on these marijuana companies, I made a lot of money back in the day, but that was in the initial squeeze. Like, when we started to go through this phase, that's the phase that I like to be involved in. Now, this phase over here, I'm not too interested. I'd rather be putting my money into tech. But if we look at this from a technical perspective, let's go to the weekly and let's see. So we had that push up and we're outside the Bollinger Band. We push back down. I like where we are right now, right at the mid Bollinger Band here. If Tilray is going to work and it's going to continue higher, it's going to have to respect this low right here, and it's going to have to continue higher now. Otherwise, if it breaks through this low, it's going to break through here, and we're most likely going to come back and test this low down there. All right. GNUS. I had some friends that played around with this. Same thing as Tilray, exactly the same analysis. Like, not too interested in these. I don't think you guys should be wasting your money on that unless you're doing, a very, very small position. I'd rather you guys stay away from these stocks that are very, choppy and basically they're trying to trap you. This one here, FUV, I really like this weekly close. So what we can expect to see from here on this weekly close is maybe a retest of this area here. So if we open and then we kind of come back down here and test this 9, then this like 10-ish area, I would say, that would be a good entry with a stop down here. If we break through this high, I expect maybe 1 or 2 more bars left in this push. All right, GDX. Let's look at GDX. GDX. Okay, so this is gold, right? Yeah, this is part. So, a funny story. I tried my hands in gold, and I've been finding that gold has been so these past few weeks have been so trappy and like just basically bullshit, to say it in a nice way. Just look at this, right? Look at all these setups here that are not working. We have the mid Bollinger Band, we have a hammer, that fails. We have this engulfing bar, this fails. We have this hammer, this fails. We have all this. It's just a mess. Personally, what I would say is if you're going to buy gold, you kind of have to buy and hold for the long run and just stay away. One of my biggest plays ever was in gold. It was in JNUG, which is the three times leverage, where I was able to get in around. I was able to buy it around here, I believe. So I used the gold futures chart to be the leading indicator for the leveraged, right? So I was able to get in down over here and ride that up for, I think I made 3 times my money on that trade. That was a long time ago. But basically, what I would say here is with gold, I don't like this action. I think it's just really destroying a lot of people. And personally, I'm stepping away from gold. I'm gonna wait for a better setup to occur. I just think it's been trapping every single person. What I would like to see is gold to kind of retest these fibs here. Because of all this bull that's happening up here, we can see that this momentum here and the technicals are not really working. But I'm pretty confident if we can get back down to the 50 fib, which is around 31, that we're going to see a big pop. And the reason why is because this was also previous resistance, now acting as support with the 50. So I'm personally going to wait to see what happens when we get down here. But otherwise, I'm not really interested. I want to trade things and invest in things that respect the charts so that I can make my money. If it doesn't respect the charts, like this here, like these hammers are failing, these bars don't mean nothing, then I don't want anything to do with it, because then I know I don't have an edge. DDOG. Let's look at that. DDOG. Add a dog. All right, now this is great too. This is a nice uptrend. We retested the mid band once. We're retesting it again, and we close with an inside bar. So how I would play this: bullish above this inside bar, bearish below. That's simple. So if we can break above this bar, I'll be looking to see if we can get involved to make that leg up there. If we break below, I would probably expect us to retest this. And then if we break through there, then we have the fibs, which would be from here to here. And we can see that we have the 50. The 50 is actually lined up here. So this is actually a good area to buy, I would say. The 618, we have the 786, which would line up with this previous resistance. So that's how I would play it. What stock do you think are worth to watch for intraday trades? Very, very good question. So when it comes to intraday, when it comes to day trading, the only thing that I trade is the S&P 500 through futures contracts. I don't trade anything else, because everything else that I see, even though so many people are preaching about high flow, low flow, whatever the hell they call it, high volume, gappers, blah blah blah, I think it's all bullshit. At the end of the day, trade one thing and master it. That's my philosophy. The S&P 500 is the highest, has the highest volume, and it is the market. So by me trading the S&P 500, I'm trading the market. I'm diversified because there's 500 companies in there, and I have a reliable instrument that I can backtest. Right? I can backtest the S&P 500 for the last 50 years. You can't do that with some of these new stocks that are popping up there. It's literally just a gamble, right? For new stocks, for other companies, I recommend investing and swinging. But day trading, I want something that is reliable. So all of my systems, all of my tests are done on the S&P 500, and that's the only thing I day trade, because I know what the stats are. I know that I have about a 50 to 60% win rate. I can expect to make this much. I can expect to lose that much. The other instruments, the other stocks, I have dabbled in them, but I find it better if I want to play those to be an investor or to be a swing trader. XLE. Let's look at that. XLE. So this is energy. Okay. I don't really play in energy because of this bull here, like this type of stuff. I don't like to be in markets in a downtrend. It's just something that it's a personal thing that I'd rather be in stocks that are bullish. Bullish usually tend to respect the price action more. Bears typically, like example over here, right? Like we had a clean break through the mid band and then we just collapsed, right? This is what you'll see in the bearish type of markets and the short markets. It's all traps. It's all looking to trap people. Who's trapped? Where are they trapped? Etc. But if I look at this chart, we had this nice hammer, and I can see that this is going to line up with one of the fibs somewhere or close to them. So let me draw this fib right here. That's what I thought. So right there, that's a 786, right? So this leg long is trading. The 786 is tagged. So from the bull side, they want to continue this, maybe pull back a little bit, and then break through this high. From the bear side, what I'm seeing here is already rejection at a fib level. See, I didn't even know. I promise you guys, I've never looked at this chart. I saw that wick, and I knew that wick was at the 50, because that's just how these algos trade. So we can already see the algos pouring in at the 50. And if we break through this, you bet they're going to be here at the 618 and the 786. If we start to roll over here and we break through this pivot, then I can see that the short side is in full control, right? So we have a battle of two fibs right now. We have the 786 long, we have the 50 short. So whichever pivot gets taken out is going to really show the winner. But even if we break through here, we still have a lot more fib shorts above us. The long fib is this the last line of defense. If this low breaks here, I'm expecting this low to break as well. All right. So with the current lockdown, do you see Netflix hitting all-time high over the next couple of weeks? Let's go back to Netflix. So if we look at this from a technical perspective, we have that inside bar. And if we break to the upside, it can take however long it wants to make all-time high. And that's the problem with options, is that you're setting yourself up by having a time limit. I rather trade the stock because I don't have a time limit. I don't have any issues with decay. So with Netflix, it can take however long it wants to. There's no indicator that's going to tell you the time that it's going to take. You can never predict that. So I wouldn't ever get into a position hoping that in 1 week or in 2 weeks it's going to hit the target, because I've been day trading for a long time, swinging, investing. Sometimes things within, like, let's just say we break through this high, we have 1-2 candles, take out the all-time high. That's possible. Or we can just do this, break it, go sideways, and then eventually come through here. So never put a time limit on when you expect things to happen. That's a lose strategy in the long run. So day trading, recommended large cap stocks. Yes. For me, just SPY. I keep it simple. I focus on one thing. I use the futures contracts, and anything else that I'm doing, I'm going to be just investing or swinging on stocks that I like and that I believe are transformative and I'm willing to hold if things go bad. But when it comes to day trading, I'm trying to make, let's say I'm risking $500. I want to make 1,000 to 1,500 every single day. That's the goal. And be able to just make that money, cash it out, and walk away with no stress. Vaccine news, good time to get airline, hotel, and cruises. Let's look at American Airlines. Let's see what's going on with them. I was interested in airlines a while back. Back when we were, let's go to the daily chart. Yeah, so back when we were in this area, I was interested in the airlines, and I was telling some of my friends to get involved because we had this double bottom pattern, and on this third leg down, the shorts tried to push through and we turned into a hammer. So this area here, I was looking for long. Definitely, I could see that this might be a fib over here. Let's see what it is. Take it from this high, we'll come down here. Yep, the 618. So like if you want to play like a strictly fib strategy, I'm showing you guys how to do it. You take your range, you set it up, right? And then you can just front run. Fibs are about front running. So if I'm bearish on American Airlines or just airlines in general, I have this swing high, the swing low, and then I'm just layering in shorts. I'm shorting at the 50, I'm shorting at the 618, stop is above here. Just limit orders, okay? We don't care about the candlesticks. We just are going to front run it. That's how you play fibs like a champion. You front run the levels based on the trend, okay? And then we can see the same thing happened over here. This area is a fib for sure. So how we're going to do this, we're going to take it from the low to the high, and this is the 786 zone. So if you were bullish and you've seen this push up here, all you have to do is have limit orders on the 786. You can put the stop below the swing low or the 886, whichever one you want to use. Just be consistent and then just sit in it, right? And then you're waiting for this thing to chop around and just go up. So if I was in the airlines, I would have done that. I would have had limit orders at the shorts and long orders at the long. Right now, I don't really see a great opportunity to going in because it just seems like it's just chopping back and forth. So unless you front run it over here or over here, there's not much of a reason to be involved, I would say. Yeah, so when you trade futures so question is, how are you making 2 to 3 times your money? What's your initial? And you feel that it's very hard with options. So you're not making 2 to 3 times your account. You're making 2 to 3 times your risk. Okay, so here's an example of what I do. So my day trading account is 50,000. When I day trade, I'm going to risk 1% of that, which is $500. Okay, so let's say $500 on the setup on the day is 5 points for futures. So for me to make money, I have to make at least 10 to 15 points according to my rules, right? So if we make 10 to 15 points, that's going to bring me between $1,000 to $1,500. And then I just repeat that every single day, right? So that's how you do it. So you trade 1% of your portfolio. Futures, you have high leverage. You don't have DK. It's just like trading stocks. JMIA and Etsy. Okay, let's see. JMIA. JMIA. Wow. Okay. So it's clear that the bulls are in control, right? We can see that obviously. But if you zoom out further, we have these major levels back here. So what is this? 48, and we have this up here at 29. I would say if you were in this run, that it would be a good time for you to be taking out some profits. If you're not in this run, I wouldn't be chasing up at these highs. Personally, I would not. Let's take the fib here and let's see what that wick played out to be. So that was a 618 tag right there. So again, here now let's analyze this from a fib perspective. Okay. Oh, sorry, my fib was messed up. There we go. So let's analyze this from a fib perspective. So we had this big push up. We had to pull back to the 618. And what's happening now? Well, what's happening now is all these levels are targets. And you can see that someone's already hitting their targets on the fibs, right? Because you already see that wick. So people that bought on this fib, they've already sold at this 50% target. And we see this wick coming down. That's why I'm not interested in being a buyer. I wouldn't be up here because these guys are cashing out. So the next thing is, if you want to be a buyer, is if we start to pull back, is take the fib from the last swing low up to the swing high and look for these areas, so the 618 and the 50, to be areas to go long for the next leg. But anything can happen. We can squeeze higher, but I don't like to buy at highs. That's something that I don't I just don't do because I got burnt many times in the past. Okay, I'll walk you through the trade on Friday. Yep, I'll do that. Let's look at Etsy. So Etsy, zoom out. So we know there's an uptrend. What I don't like with Etsy is this wick. Let's draw the fibs and see what we get. So I'm gonna take it from this wick down here, up here. So we can see the 786 is in play right here, right? You see how crazy this is? If you draw the fibs, buy at the levels, put stop losses, and just walk away. Because if it's a big volume company, the robots are going to be there. So be a robot. Not really, but you know what I mean. Be a robot with your orders. If you come in here and you buy long at the 786, right? You have a limit order there, and you have a stop at the 886. You've already hit 5 times your money. So if you've hit more than 5, if you hit that one time, you're good. If you do that once a month, you're good. If you have 5 times risk to reward, you only need to win, I don't know, 20 out of 100 trades. You see why risk to reward is so important? And that's why I hate when people are saying risk $100 to make 25 bucks. Yeah, it feels nice that you win more often, but it's not going to work in the long run. Okay. So yeah, so here for Etsy, I think the time to buy has passed, really. And I think the shorts are in play here. Let me see. So let me get rid of the long fib. Yeah, so This zone here is at the 618 to the 786. This is the short zone. This is what they love to short, and you already see that wick has developed. So what I would say here is, if we try to retrace, let's draw a smaller fib. So take it from here to here, and let's look for this area to be a nice area to purchase with a stop down here. That's how I would play it. And if you want to go short, I would just be short right below here. If we break through this low with a stop up here, keep it simple. So let's look at Friday on the SPY from the day trading, and let's talk about the scenarios and how everything worked out. Okay, so let's go to Friday. Okay, so this is Friday. So let me get rid of everything here, and let's talk about it. So the first question that I ask myself whenever we enter the trading day, and the way that I designed all my systems, are based on where we open. Where we open determines who's in control, okay? So if we gap up, I have a certain rules. If we gap down, I have certain rules. If we open inside day, I have certain rules. So this is clearly an inside day. So here's 9:30. So we're opening in the range. Okay, anytime we open in the range of the previous day, then I treat it very, very different. I treat it as a day where we're going to be going sideways mostly. I don't expect that we're going to come through and break through this high, or we're going to come through and break through this low. I don't expect that. The odds are telling me that's not likely to happen because we're opening neutral. Okay. Versus if we open like this on the previous day's low, I'm expecting momentum. Or if we open like this, gap up, I'm expecting momentum. So that's the major, major difference. Okay. So the setups here. So the first setup on the day for day Friday was we had this inside bar. Okay. So this inside bar is at this gap fill. So this is a short signal. So what we do is we just short below the low, put a stop right on the high or a little bit lower. So like right there. And that's your first setup. That's 3-1. Okay. So you risk 1,000, you make 3,000. Simple. So that's the first one. So that trades, you take this down here, you make money. So then the next thing we want to do is we want to take the fib from the previous day. So the low to the high of the previous day, and we want to have it sitting here too. And then we get the tag of the 50, right? So the 50 is always a great area. So we take the short, we lock in profits here. Now we see the 50 is holding. So we do the same thing. We enter long above here, stop below here. And this one was another 3. Okay. So let's say we're at 6,000 on the day at that point. Okay. Now what's the next play? So the short traded, the long traded. Now let's draw the range of the current day. So we have this high to this low. Okay. And this is the intraday fib. So what happens with the intraday fib? So we pull up to the 618 initially, we reject. So you could scalp this. Then we pull to the 786, we reject. You can scalp this. And then the bigger play, we hit the 886. The 886 is always the last line of defense for the swing high. So this 886 was tagged once, and we got that inverted hammer. And this is the trade of the day. We get that inverted hammer right at the 886, and then we just go sideways, and then we trade to the target, right? So we can short right below that low, put a stop above the high, and then we can look at these targets for our areas where we want to get out. Okay. So look at this and look at this. You see how when we touch the fib extensions, we immediately turn? And the reason we do that is because there's algorithms that are programmed to sell at these levels, right? So anyone that shorted here, the algorithm is already buying here. And that's why you see these wicks. So this is the trade of the day. If you held on to this and you're able to get out, let's say at the 382, that's 8 times your money. If we pulled it down to the 618, that's 10 times your money, right? So whatever, you're risking $100, you know, that's 800 to $1,000. If you're risking $500, it's 5 grand, etc. It depends on your account. Everything that I do depends on your account. So whatever your account is, you risk 1% of that. That's how you trade. That's how you stay alive. If you catch any one of these plays that I just pointed out, you're going to make money on the day, because even when we lose, we're only going to lose that minus 500 bucks or minus 100 bucks. But when we win, we're going to be winning that 8,000, that 3,000, that 500, etc. Okay. Oh, Tesla. Yes, I will do Tesla. So yeah, so guys, if you want to day trade, that's how you got to break down the chart. Where do we open? Where is the 50 fib? Where is the intraday fib? Where are the inside bars? And that's what I do every single day in my systems. So if you go to tradingwars.com, I have all my systems and I follow them because I know they work. I have a statistical edge that I've back tested on the SPY. I don't know if they work on other things, like as well. They do. But here's the secret about trading. And I want you guys to remember this. The secret is not about being right or wrong in trading. The secret is about risk to reward. It's about risk management. So I have people that call me and say, "Hey, Rich, I was up on the week. I won like 4 days in a row, but then on that fifth day, I lost everything." That should never ever happen. Every single trade should be entered with the same amount of risk. We don't treat any other trade special, or better than the others. They're all just flipping a coin. Every single trade is flipping a coin, right? So when we flip the coin, we don't know if it's going to be heads or tails. But if we're betting on heads and we're right, we're going to make $3, and if it goes on tails, we're going to lose $1. That's simple, right? So those setups that I showed you, did you notice how I'm going for 3-1? I'm going for bigger picture plays, because if I'm right one time, that pays for my whole week. That's it. So I don't need to be accurate. I don't need to be perfect. All these calls that I'm telling you guys, I don't need to be right or I don't need to be perfect. I just need to make, 2 to 3 times what I'm risking. Okay. So let's look at Tesla. So the initial call on Tesla that I gave was somewhere over here. So I've been looking at Tesla for a long time. I believe it's a transformative company. I made the call on Tesla somewhere over here. Let's see what it's up right now. So about 18%. And obviously there's news that's a part of it. But in technical analysis, we don't care about news. We just read the chart. We keep it simple. So let's look at the chart. What was the chart saying on Tesla? Okay, so what's this chart saying? So we're going to zoom back, and we're clearly in an uptrend, right? That's obvious. So what really interested me about Tesla was when I took this swing low over here to the swing high, and then I saw that it was sitting on the 50, and the 50 lined up with the mid Bollinger Band. That's what got me very interested. Now we had a very, very powerful close on Tesla, and we're already up, 15% from my call. I think that two things can happen here. We either have another inside week here where we digest again, or we just rip right through. The worst case scenario is if we break this low. If we break this low, we will break here, we will break here, we'll break here, we'll break here, and we'll probably come back down to this area. I don't see that happening unless we open, like unless the market opens at 6 and there's a big sell-off, and then Tesla by default sells off. But very, very bullish on this stock, and I think it has a lot of room to run. And if we just use the fibs here, we tag the 50, so we can at least expect to get to this area, 560, 580, right here at least. That's the minimum target. Does your fib have default setup, or do you make modification? And could you talk about the ignition candles, please? Yes. So, guys, the ignition. So my YouTube channel, check out those older videos. I talk a lot about them, but to be completely honest, everything in more details, if you want the exact specifics, then you have to go through my systems, because people pay me for that and I can't give away what they've already paid me for. That won't be fair to them. But that being said, be creative. I'm not telling you to buy anything that I sell or work with me or join the apprentice program. You don't have to. Just be creative. You figure out what you want to do, then go back and back test it. That's what I preach to all of you guys. Be creative on your own. The reasons why I developed all these things is through creation. I sat down, I lost money, I made money, and then I was like, how can I get better? So when you do your trades, figure out how you can get better and create your own rules and your own system. If you don't want to, work with someone like me, then you do it on your own. But have your rules, have them written down, and just follow through everything that you do. Don't flip flop through system to system to system. If you're going to do something, stick with it for at least 30 trades. All right. So we're already at an hour here, which is pretty crazy. I thought this was going to be like 15 minutes, but I'm really, really happy that we got so much requests, and I very much appreciate all of your time. The last thing was best way to learn to trade futures. The best way to learn to trade futures is for me to teach you. It's that simple, because everything else out there is full of bullshit, and I've seen it. When I get those ads on YouTube, I literally want to break my phone because I could see how evil these people are. They're just lying. You know, they're not even giving you any real info. I'm giving you guys info right here. You can build a system from exactly what I just told you. Trade the fibs. If you want to walk away with a system, here's a system for you guys today. Trade the fibs. Buy at the 618, put a stop at the swing low. That's it. Just repeat that a million times, and you're gonna make a lot of money. All right. So we're gonna wrap up here. Again, thank you for your time. I'm very grateful for that. I hope you learned a lot about the fibs, the inside bars. We looked at a lot of charts. And remember, if they don't work, it doesn't matter, because if it doesn't work, if you're an investor, you buy more. If you're a swing trader, you take your loss, you look for the next setup. If we're going for 3-to-1 risk to reward, we need to be right only 26 out of 100 trades. If we're going for 2-to-1, we need to be right 34 out of 100 trades. Where am I based? Right now, I'm living in Orlando. I'm a CPA, and I work on the road a lot. So I travel from state to state. But right now with the COVID situation, I'm just here in Orlando hanging out and doing some charts. All right. Thank you very much for your time. And I'm going to end it here, and hope you enjoy your weekend. And if you have any questions, if you're interested in my apprentice program, or you want to look at my systems, just DM me. I'll give you a call and we'll talk. All right. You guys take care.